Good day, my wonderful students. Welcome to another interesting episode of our virtual learning. My name still remains Olawale Benishola, your commerce teacher as usual. I welcome you to today's lesson brought to you by Igota Virtual Learning. Today we'll be exploring the fascinating world of finance and financial institutions. Today we will be covering key aspects of money. Yes, the same money that we spend every day, and banking system, which are fundamental concepts in commerce. This knowledge is not just crucial for WAEC exams but also essential for your understanding the financial world around you. On to the next one. Let us talk about our lesson objectives. What are we going to gain by the end of this lesson? By the end of this lesson, you will be able to explain, that's number one, to explain the concept of money and its evolution and functions. Number two, identify and describe different forms of money. Number three, understand the Nigerian banking system. Number four, differentiate between various types of banks and functions. And the last but not the least, you have to explain the role of specialized financial institutions. Let's move on. Let us begin our adventure for today's lesson with what is money? What actually is money? What does it mean? Let me explain. Money in simple terms is anything that is generally accepted as a medium of exchange for goods and services. Full stop. That is not all. Think of it as a tool that makes trading easier. Instead of exchanging your chicken for someone's yam or rice directly, which is also known as trade by barter, you can sell your chicken for money and use that same money to buy yam. Let me explain further. Money, which is generally acceptable as a medium of exchange, can also be acceptable as a settlement of debt. Moreover, we can also say that money can be defined as anything as a means of payment. Let me explain this in a legal term, that is in a legal definition of money. Do you know that before the existence of money, there was something that we know as trade by barter? Let me tell you something. Money was not in existence. This is how trade by barter was performed. An item such as yam, which I said earlier on, was exchanged, such as what? Chicken, trade by barter. Now, money came in which way? To facilitate exchange of goods and services to make it easier. Let me give you more aspects of money. Let's proceed. When I asked to relax, I did not say you should go, because right now, where we stopped, based on the definition of money, we take us on to the history of money. I am talking about evolution of money. Now, why are we talking about evolution of money? You need to know the evolution of money for you to understand how money came into existence. Money originated because of various difficulties that arise from trade by barter. Now, what it means is that trade by barter, which I've explained earlier on, the definition of money, also have its own difficulties, also have its own issues. Do you know that in the olden days, different commodities served as money? Imagine that. Different commodities serve as money, such as cattle, beans, yam. These were the money that we're using in the olden days. Let me tell you something. In the olden days, cattle, cowries, shells, tobacco, salt, imagine the salt we used to cook, and the beads we use as jewelry were used as a medium of exchange instead of money in the olden days at one period or the other. Later on, precious metals were invented, such as silver and gold, were used in place of what? Money. The amount of metals were weighed, were checked, the kilogram were looked at to weigh whatever, whenever a payment was to be made. With time, the metals were cut into pieces because they were very, very heavy due to their weight. And so, coins of limited face value was issued. What I'm saying, that coins was the first form of money that came into town. The use of paper money originated from the use of receipts issued by goldsmiths in exchange for deposit of their precious metal to the goldsmith. The receipts became banknotes and the goldsmiths became bankers. Imagine that. Look at how the history, look at how time changes yesterday. In recent time, people started accepting inconvertible paper money as medium of exchange. Over the years, different forms of money have been introduced to facilitate exchange. For anything to serve as money, it must be enjoyed. It must be enjoyed by people's confidence. The principal stages of money have therefore been used in commodity exchange, precious metal by weight, coins, goldsmith receipt for deposit of cash, banknotes convertible into cash on demand. I am not done yet. Let us move on to the types of money, which can also be known as forms of money. I am going to be starting with legal tender. What does it mean? A legal tender is any means of payment by which a trader is compelled by the law of the state to accept in settlement of debts. This is money which has the backing of the law. What it means is that any kind of money that is accepted by the current government in a country is known as legal tender. The next one we are looking at here is coins. Coins are precious metal made of silver which have a defined amount of metallic content. What it means is that they also have an official stamp of authority placed on them. Coins are indestructible. Do you know that Nigeria has spent coins before? Oh, those in Gen Zs will not know because they don't know that coins existed in Nigeria too. We once have 25 kobo, 50 kobo and 1 naira in coins. Gen Z, now you know. We have what? Banknotes. These are the banknotes which we currently spend in today's time. These are slips of papers or currency issued by the country's central bank. Paper money originated from the receipt issued by goldsmiths, which I explained earlier on in the evolution of money. To those who deposit precious metals, e.g. gold, with them for safekeeping, Nigeria also have its own denomination such as 5 naira, 10 naira, 20, 50, 100, 2, 500 unto 1000 naira. Other forms of money include partial money. These are representatives of money which may not be a legal tender. We also have commodity money. This is the type of money which has value as money, also as commodity. Example: gold, diamond, cattle. Let's go on. We have token money. This is a form of money with a face value which is greater than the value of the metal content. We have deposit money. We also have fiat money. Fiat money is any money that the government has declared to be legal tender but is not backed by reserve. Paper money is fiat money since it cannot be no longer be redeemed for gold and its worth is almost zero. We also have fiduciary notes. Now let us talk about the qualities of money. What are the things that you see to identify this is a money? Number one, it is generally acceptable by the public. 2, it is portable. That means it is not heavy. 3, it is relatively scarce. Money must be scarce. It must not be too many as it may lose its value. It also have durability. That means it must last long. Stability, divisibility, recognizability. Money must be recognized and identified by the totality of the people in the society, and it must have its own unique value. That is the quality of money. Oh, I'm not done yet. Do you know that we also have functions of money? Yes, money also have its own functions. It performs the following functions. It serves as a medium of exchange, as I've said earlier on in the definition of money. Do you know that it also stands as a standard of deferred payment. It can be stored and accumulated to fix what? Debt. It is a unit of account, is a store of value, and it can also be used as a measure of value. The value of goods and services are expressed by the prices. Therefore, money is used as a yardstick, as a means to measure and compare the worth of goods and services as an occupation. Now that we have spoken about money, let us move to where we are going to keep our money. That is the financial institutions. Yes, financial institutions. I am talking about banks and financial institutions. That is where we are heading to. But first, let us ask ourselves, what is a bank? A bank is a commercial institution which performs various financial activities. Oh my God, that is accepting and handling of deposits of its customers. It is a body of persons who carry on the business of banking. Banks are institutions that create money. Now you can hear me. Banks create money and gives out loan to people. In summary, let me just break it down once and for all. A bank is a place where money and other valuables like your will, like your jewelries, like your vital documents are kept for security purpose. Now you know what a bank is. When we are talking about banks, we need to start from the founding father of banks. We are talking about central bank. What is the central bank? You take note of this. Central bank is the highest financial institution in every country which implements the monetary policy of the government. It is the sole authority in the banking industry which acts as bankers' bank to the government and the commercial banks. Central banks control and regulate the supply of money. Most countries have their own central bank which work closely with the government in order to have means of influencing the credit policy of central banks in the country. Now, example, we have Central Bank of Nigeria. What are the functions of central bank? Let's begin. Bankers to the government. Central bank is an agent and a banker to the government. It controls public accounts, receive revenue on behalf of the government, and make payments from this account. Central bank also obtain loans on behalf of the government. Number 2, issuance and control of currency. The central bank has the right to order the printing of the currency, of the issuance of it. It controls the circulation of the currency, exchange the bad notes for new ones, and see to the destruction of the new notes. That means that it makes sure that the old notes which are bad are not taken back into the marketplace. The last one on my list, we have Bankers Bank. The central bank acts as the bankers to the bank by ensuring that the banks open accounts with it in order to what? To monitor and supervise every other banks. Yes, we are moving gradually. Let us move on to the commercial banks. What are commercial banks? Let me explain. Commercial banks are financial institutions which accept deposits and other valuables from the public for safekeeping with the sole aim of making profit. They are owned by private individuals, institutions, or government. Central banks, take note, are limited liability companies. Let me give you an example of central bank in Nigeria. We have UBA, United Bank for Africa. We have Union Bank of Africa. We have Guaranty Trust Bank, and so on and so forth, like Access Bank, like Zenith Bank, and so on and so forth. Let's talk about the characteristics of commercial bank. Number 1, commercial bank is a limited liability company. Number 2, the motive for its establishment is profit making. Take note, they are members of the money market. Commercial banks are incorporated, and the last characteristics that we have, they accept deposit and other valuables. Oh, let us move on to the functions of commercial banks. They accept deposits. I've explained that one earlier on. They lend to customers, that is, they give loans. They are also agents of payment. Commercial banks can act as agents on payment on behalf of their customers. Safekeeping of valuables, yes, your jewelries, your will, your document or your certificate, banks can keep that one for you. Issuance of bank statement, when you need your bank statement, your bank can give it to you. They also invest. Bank acts as an agent of investment and stock exchange transactions. They also act as foreign exchange transaction. If you are an importer or an exporter, banks also act as an agent in between. If you are a busy businessman or businesswoman, they facilitate international trade, they provide financial services, and they act as an executor for their customers. Do you know that commercial banks can act in the capacity to execute the will of its customers? Yes, when you want to do anything that involves money, you can give the command to your bank to do it on your behalf. Now you know the functions of commercial banks. Yes, we have the many type of banks that we're going to discuss now. Specialized banks. Now look at this: specialized financial institution, specialized in an aspect of financial activities for which they were established. The institutions were development banks, merchant bank, mortgage bank, savings bank, and insurance. Let us look at merchant banks. Merchant banks are institutions which perform specialized functions such as acceptance of bill of exchange, insurance of loan for foreign trade transaction, insurance of loan shares, provision of medium and long term loans. They are sometimes referred to as acceptance houses. Let me take you to development bank. Development banks are specialized financial institutions which provide long term credit or loan to other enterprise for capital projects. They provide loans for projects in the area of agriculture, commerce, and industry. Examples of the ones that we have in Nigeria: we have industrial development banks, Nigeria Bank for Commerce and Industry, and Nigeria Agriculture and Cooperative Bank. Let me take you on to mortgage bank. Mortgage banks are also a type of financial institutions that specialize in granting loans to individual and corporate bodies for building purposes. Now these ones are specialized in giving out loans for you and me and corporate bodies for building properties. Such loans are repaid by instrumentally and can be spread over several years. Mortgage banks accept deposits from investing public at a rate of interest, using the fund to lend at a higher rate of interest to people who wish to purchase their own houses. It is another beautiful moment for us to practice with some past questions relating to money and banking. Remember, these questions will help you to catch up with how wide questions are being set in the exam hall. The primary function of money is, this one's coming from year 2019. Option A, store of value. Option B, medium of exchange. Option C, standard of deferred payment. And option D, transfer of value. Was our answer? Our answer is option B, which is medium of exchange. Name me, analyze, and explain. Store of value is wrong. Why? Because this is a function of money. It is a secondary function. This allows people to save money for future use. The primary and main function of money, it is to facilitate trade. That is why store of value is wrong, which is our first option. Option B, which is medium of exchange, is our correct answer. Let me explain. This is the primary and most fundamental function of money. It eliminates the problems of barter system. Why? It is correct. Money was primarily created to facilitate trade and makes exchange easier. Measure of deferred payment, which is option C, is the secondary function of money, while the last option, which is measure of value, though important, this is another primary function of money, but it's not the main one. Question number 2. This is coming from year 2019. Which of the following is not a quality of good money? A, portability, B, durability, C, elasticity, and D, acceptability was our answer. Our answer is elasticity. Let me explain. Option A, which is portability, it is wrong. Though it's a crucial quality of good money, but money should be easy to carry around. B, which is option B, durability, it is also wrong because it is an essential quality as money needs to last long. C, which is elasticity, is not a traditional quality of good money, often confused with flexibility. Why it is correct, the traditional qualities doesn't include elasticity. Acceptability, which is also wrong, which is option D, is a critical quality for any form of money. Must be widely recognized and accepted. This is one of the most important qualities of money. Let us quickly run down through what we have done for today. We have covered the evolution and function of money, different types of banks, role of specialized financial institutions. Now, this is time for us to now talk about the real life application. Understanding this concept helps you make better financial decisions. Choose appropriate banking service and manage your money efficiently. Let me encourage you, dear students, mastering this concept will not only help you excel in your WAEC exams, but also in managing your personal finances. Keep practicing, keep learning, keep checking through real life how money is being spent with past questions. Stay curious, keep learning about financial world around you. Remember, if you have any question, feel free to reach out through the Go Virtual Learning platform on their website, or you can contact me on the number showing on your screen below. Thank you for your attention and see you in our next lesson. My name still remains Olawale Benishola. I am still your area teacher. Stay blessed.